Hi, everyone. Thank you for joining Wisdom Tree's office hours titled Election Season is Now Upon Us, where you'll hear from Kevin Flanagan, our head of fixed income strategy, Jeff Weniger, our head of equity strategy, and Sam Rines, macro strategist of model portfolios.
Thanks, Irene. Good afternoon, everybody. Good morning, where that applies as well for those of you on the West Coast. Fed's done. It's over. They cut rates 50 basis points. Enough with the Fed. Let's go to the election. That's where we want to go now with this office hours. Lots to talk about in a relatively short period of time. And I think one of the important things here is, everyone, we're looking at November 5th, right? By the way, for those of you keeping track, the Fed meeting would normally be November 5th with the outcome on November 6th, but because of Election Day, they've actually pushed it back. So the next Fed meeting will be November 7th on a Thursday, not the usual Wednesday when they get the announcements. But enough with the Fed. Sam, I'm going to turn to you first. A couple of quick questions. First, let's get out of the way. Has early voting started yet? We're talking about November 5th, but is Election Day upon us right now?
Oh yeah, the election started a week ago, which is kind of interesting. Ballots went out. There was a delay. North Carolina was supposed to send out ballots about a week ago. They got delayed due to some issues with a court case. But yes, voting has already started. We're already there. And that makes it kind of interesting from here on out, as incremental policy may actually not have as much of policy, announcements or details may not actually have that much of an effect on the incremental vote, particularly in places that have already started early voting. A lot of people have already made up their minds. So to a large extent, it's already here.
Yeah, I mean, I think that's a great point. We've gotten a bunch of questions coming in as well. Jeff, let's bring you in here. I know that you enjoy looking at all the real clear politic polls, and you're stuck on all that. So what is your input telling us?
Yeah, and I do have some of the latest polls, because you had this morning on the national side, Rasmussen came out. This is a national poll with Trump up 2. And then the Fox News was Harris up 2. So it looks like a coin toss. Here we're on predicted. For those of you who I would hope you know how predicted works. Basically, let's say you think Harris is going to win the election and you were to put real money behind this. There's Polymarket's your favorite, Sam, for referencing these types of things. Let's say you felt the Democrats would win this presidential election. You would put, let's say, $58 in there, and it would pay $100. So you'd have a $42 profit if you're right, and you would lose the 48 if you're wrong. So you can see this is basically a 58, 44. It never sums perfectly to 100 because there's wide bid asks on these things. That is the edge. You can see this widening out. I guess this is probably Sam since the debate. Now, elsewhere in here, we'll see which direction my colleagues want to go on this. I've opened up the Kamala Harris campaign page where you can click on each of the various policies that the Harris campaign wants to implement. I can't mark it up with the pen like I usually do, like with our BLS CPI report. And then I have the MAGA platform on another page as well, where I have marked it up. We can go through tariffs, taxes, and so forth. Sam, what direction we want to go here?
I think we really want to hit on tariffs and taxes. Those have been two of the big points that have come out from both of the campaigns. And we've had some detail, not a lot of detail, not enough detail to actually make, significant and I would say concrete statements about it. But we have had a little bit that we can kind of talk to. And what we've seen in the past is tariffs have actually been a tool that was predominantly, one of Trump's favorite things. Tariffs. That is not going to change, and particularly when it comes to China. Right? We have seen tariffs initially with the Trump administration, but then follow through from the Biden administration, and then more from the Biden administration. So it's not as though tariffs are something new, something coming out of the blue. These are something that are here. They're here to stay. And the question is, do we get more? And what do we get those tariffs on? I think that's That's a really important part of understanding the next administration, both on the GOP and the Democratic side.
So, Sam, I wanted to ask you a question on the whole tariff thing. So, intuitively, theoretically, whatever term you want to use, and this was included in one of the questions we got as well for tariffs, most view that as being an inflationary type of development. So give us a sense. We saw what Trump did during his administration. And this is not a political comment at all. By the way, we are not going to make political comments on this. Just straight down the middle here, very objective. But we saw the inflation numbers. Now, we could argue what caused the inflation under the Biden administration, but the reason why, had say nothing to do with tariffs. But I wanted to ask you, did we really see any kind of significant price pressures on areas during the Trump administration where tariffs were levied?
Not really. Not really. And we really haven't seen inflation pressures from the tariffs that the Biden administration put on either.
Right.
And a lot of that is due to the tariffs aren't on things that we buy a lot of. The tariffs that were put on under the Biden administration in particular recently were EV tariffs, imported Chinese electric vehicles. We, as a country, really didn't import any Chinese vehicles on the EV front to speak of whatsoever. So it's not really going to have much of an inflation impact on that side. And on the solar panel front, we were pretty much flooded with solar panels to begin with. So it was one of those where it's not really going to be that big of a deal now. It could be in the future, right? You could see solar panels, go up in price in the United States because, it's basically, the U.S. manufacturers that are going to benefit from it. Those are more expensive. But generally, we haven't seen broad enough tariffs to really have an impact on the inflation numbers that we look at every month, whether it's PCE or CPI. Those numbers really haven't been influenced much at all, simply because they haven't been broad enough. If we were to do much broader tariffs, that would be a completely different story on the inflation front. It would, in fact, have an impact. But as of right now, we're kind of back to the old, you'll love this, we're back to the old style of inflation where services are, a little bit sticky, kind of that 2.5%, 3.5% range, and goods are in deflation mode. So I do think that you could begin to see some issues on the goods front, but again, it's going to take much broader tariffs across a much larger portion of the goods complex than we currently have to get that moving.
On the inflation side, let's go over here to the Kamala Harris webpage. Now, we were on MAGA before. Now we're on the KamalaHarris.com. No bigger inflation issue in this country right now than the cost of housing. And I know you had some comments here, Sam. This is the official plank of the Harris campaign that we're looking at. You had this first-time homebuyer credit. I can't mark this up. I don't have the inability to mark this up. This homebuyer credit is pretty much the number one thing that the campaign is putting forth.
Yes, that is the most important and intriguing thing to me, because there's actually some detail to it, which is you're going to get a $25,000 credit for buying your first home. That's pretty specific. That's pretty laid out. And that has significant implications for large portions of CPI and PCE that have been a little problematic of late, which is shelter inflation has been elevated. So if you do have these 3 million more rental units and homes being built, and you do have a tax credit on top of it, you're likely to see, 3 million homes is not insignificant. That's a positive from the supply side of the economy. But again, you've got that $25,000 tax credit. That's a pretty big positive for the demand side of the economy. So it's one of those where it sounds really good. Maybe we'll have a little crack in the shelter inflation. We'll be able to see those numbers move lower, but you're also going to pick up demand. And, it's a lot easier to say I want to buy a home, and it's a lot quicker to say I want to buy a home than it is to actually build a home, right? That takes a lot of time.
And you could see here back on the MAGA, whenever you see this page, it's going to be the MAGA page. You can see these two are now duking it out on the first time buyers. It's like somebody announces one thing, then the other candidate comes out 48 hours later and does the other one. We saw that on the no tax for tips, which they're both matching. We will see the other thing that came out. I mean, they're both basically just buying votes at this point, one gift to each constituent. We saw the one thing that could affect theoretically, I don't know, the credit card companies, the MAGA camp in the last 24 hours, Sam, talking about capping interest rates on credit cards. We'll see if that gets answered by the Kamala Harris campaign. Kevin, where do we want to go from here?
Well, I would say, what are we talking about right now? What point can we underscore that a Harris or a Trump administration are not going to be deficit hawks by any stretch of the imagination? Talking about deficit discipline. But Sam, that brings me to my next question and a pre-submitted question that we got as well. We're all talking about, is it Trump? Is it Harris? What about Congress? What about the Senate? What about the House of Representatives? I think they have a say in fiscal policy, don't they?
And answer it in the context of this question from Lacey that came in earlier. Says looks like Ted Cruz is losing. Is Ted Cruz losing ground?
On the margin, but still ahead.
Okay,
I'm based out of Houston, so that is something that I see many signs for. But yeah, to Kevin's point, it does get overlooked, particularly this time of year when you have two candidates battling out at the top of the ticket. That down ticket really matters as well, particularly for large game-changing policy that we have to pay attention to over time. The administration itself can do a lot of things with on the tariff front incrementally, particularly on the regulation front. So it matters a lot who's in the White House. But if you want to get something big done, you have to have the votes in the House and you have to have the votes in the Senate. And right now you have betting odds at about 75-25. Republicans take the Senate, and about 66-33 that the Democrats take the House. That's what we like to call divided government. Divided government tends to limit the amount of big things you can do when it comes to restructuring policy, whether it's healthcare, whether it's significant changes to taxes, et cetera. So it does really matter that, it looks like the House and Senate aren't going to be just one big blue wave or one big red wave. It really does look like we're going to have divided government, at least as it stands today.
So let's get back to that point for a second of what the executive branch can or cannot do. Tariffs. Does the executive branch need congressional approval for tariffs? Not
all tariffs. There are ways that the executive branch can put tariffs on without having the approval of Congress. It's not as extensive as if Congress were to agree to them, but the executive branch can do a lot on the tariff front without having to go to Congress for it. The regulatory front, again, that is a big one as well, where you can legislate via regulation pretty effectively. Whether it's antitrust, as we've seen over the past couple of years, whether it's the Department of Energy that we have seen kind of vacillate in both directions over the last decade. There are many ways the executive branch can legislate their way through regulations and the administrative side of the political sphere without necessarily having to bring it to Congress or Senate. Now, the Senate and Congress don't necessarily always like that, so they could pass something to offset it or take away some of that veracity. But it's very much thinking about what can be done without Congress at this point that really should be top of mind.
However, when it comes to China, maybe that's one area they all kind of agree about, right?
It's the one place when you hear China, the rhetoric coming out of Washington, particularly towards China and trade generally, it does tend to actually be something they can agree on. And it tends to be a place that both Democrats and Republicans have at least found some common ground, not perfect common ground, but it's a very popular thing to talk about. It doesn't really, there's nothing negative that's going to happen to them for saying, we want more jobs in the U.S. We don't want to continue to send jobs to China. That is a very popular talking point. And the major way that you can do that is either through tariffs or through incentives, like the Inflation Reduction Act that had a lot of incentives for bringing manufacturing back to the United States. You can do a lot of it through those two things, and it's unlikely that you're going to see either of those talking points move away. You may see the trajectory of the incremental dollar, particularly from the Inflation Reduction Act and other stimulus packages that we've had, begin to flow into different places depending on who the administration is. But it's highly unlikely that you're going to see those dollars disappear.
Before we get to, I'm going to dump this question on Sam, the question from Julian Wolfenbarger, which is the biggest financial surprise if it's a Harris victory, biggest financial surprise if it's a Trump victory. I'll quickly address the Jason Irving question. Wouldn't the $25,000 first-time tax credit drive up inflation? Yes. I mean, think about the concept of when the Brits implemented Help to Buy, if you recall that from 10 or 15 years ago, or simply during the housing bubble of, at this point, 15, 20 years ago in this country, if you wanted to buy a place in Southern California for no money down, that was essentially a subsidy too. It was a subsidy of Alan Greenspan giving you extremely accommodative rates, drive up the price of that condominium in Coral Springs and create a bubble. So yes, of course, Jason, anytime you subsidize something, that would be inflationary. Okay, Julian, your question was financial surprise Harris, financial surprise Trump. What do you got, Sam?
Ooh, I'm gonna have fun with this one. I'm gonna have some fun with this one. I'm gonna start with Trump. I would say that you are looking at energy prices, particularly oil prices, that are relatively elevated at the moment relative to what they would be under a Trump administration, given the environmental outlook and the ability to open up new opportunities for drilling, making that process simpler. That would be a concentration of his administration. So oil prices may actually be lower in the Trump administration. It might not be great for American energy equities, ironically enough, but it would be good for, call it the volume coming out of the ground on the incremental basis. That tends to be the bigger surprise that I see out there from a financial markets perspective. From a Harris administration, one of the things I would find interesting is I don't think you're going to see an incremental uptick in antitrust. I think we've already seen that. The antitrust, particularly against companies like Amazon, Google, Kroger, etc., that's already in the system. That's already been elevated. It's unlikely that you see another step function higher on that front relative to where we are today. So you could actually see a lot of the antitrust being resolved over the next, call it 2 to 3 years. Antitrust always takes forever, back and forth, etc. But you could actually see that resolved, and it could be an odd outcome of it doesn't actually look like antitrust gets worse under a Harris administration relative to a Trump administration, and you get some of that uncertainty lifted in the medium term.
So Sam, here you go. I don't know if I'd call this the elephant in the room or not, but we haven't touched upon this yet. During the next administration, early in the next administration, the Trump tax cuts will either be extended, changed, stopped, whatever. So thoughts on that as we move forward? Because what's interesting is we've already heard the former president talking about going back to SALT, the old SALT kind of thing, and that's the state and local deduction for those of you not familiar, municipalities. So give us a sense, Trump side, Harris side, what do you think could happen? Taking into context, you could have a divided Congress.
And then I got a question for you, Kevin. It's about
No.
Fed.
This is a lot about
yes. I want to know.
politics.
After this, no, it's about the Fed and it's about Jay Powell's career. Go ahead, Sam.
I actually want to, and ask him about muni bonds too. But one of the things I find really intriguing about it is I actually see the pretty similar outcomes regardless of who's in the White House on the tax issue, particularly because SALT has been brought back on the table. SALT is a negotiating point for, call it almost, sort of both sides, but particularly for the Democrats. And if the Republicans, right, if we do, and this is assuming that we have divided government, if you have call it a real discussion about tax policy as the Trump tax cuts expire, there's a decent opportunity that the Republicans say, hey, you extend the Trump tax cuts, we'll give you SALT. And the Dems say, you give us SALT, we'll vote for the tax cut extension. So if I were a betting man, I would say there's actually a fairly good chance that you get some horse trading, you get an extension of the tax cuts, and you get SALT. Now, that's not necessarily great for the fiscal picture, but it is a negotiating point that both sides can kind of use against each other and actually come to a fairly interesting outcome, regardless of who's in the White House.
And okay, Kevin, I have a question about the most important person in this conversation, who's Jay Powell. What happens to his career in the event of either of these two candidates becoming victorious? Is it a continuity situation with Harris and a firing with Trump? How does this all play out on that side?
Yeah, if Trump wins, I wouldn't want to be Jay Powell going on The Apprentice show. I don't think I don't think he will be renominated for another term. What road he goes down will be quite interesting because we do know that we've heard some comments from the former president suggesting perhaps the executive branch should have a say in monetary policy. But remember, the Fed was brought about by an act of Congress, okay? And people need to remember that. So, the Fed chairman has always kind of consulted or, been in conversations with the executive branch. But I would say my money would be on a new Fed chair should we have President Trump. President Harris, I think to the way you phrased the question, perhaps there is continuity. Maybe it depends upon Jay Powell. Does Jay Powell want another 4 years at that stage of the game? But, it was kind of like when Biden came in, right? That if Trump had won 4 years ago or almost 4 years ago, you probably would be having a very similar conversation. There's a very good chance maybe he wouldn't have renominated Powell based upon their kind of contentious relationship during the Trump administration. So I would say no Powell under Trump, and still a probability there that if he wants it, he could go another 4 years under a President Harris.
Got it. Okay, and I wanted to ask Sam about this subsection of the Harris campaign, namely this right here. Again, everybody's throwing the fiscal situation out the window. Small business favoring Democrats at this point, Sam.
Yeah. And what's interesting is it's worth remembering this is a tax deduction, right? It's not, they're not sending out a check to go be an entrepreneur. So it is intriguing, and it's intriguing because it's coming from the Democratic side, which isn't necessarily always considered to be small business friendly. And this is very small business friendly. 5 to 50 grand and going after red tape, depending on what the red tape is they're talking about. Again, we don't have much detail on, what that red tape might be, whether it's, founding, the paperwork that it takes to found a company, et cetera, et cetera. It's going to be intriguing to see how this works. I'm guessing that the comment about rural areas is going to be very important for this, right? Targeting middle America, targeting the Pennsylvanias, the Michigans that are very important for winning elections and very contentious. I would say you're likely to see a concentration of those dollars in the focus really being in the places that you need to win to become president, and are much closer than we kind of want to say they are.
So Sam, on that note, Jeff, just to follow up on that for a second. So we were talking about, a different executive branch, a divided government, things like that. Is a proposal like Jeff just kind of highlighted, would that be something you think that, say it is a Harris administration and a Democratic House, you think that's something that the Senate would be able to say, okay, maybe that's not a bad idea? I mean, are there areas within either platforms that you think could actually get done in a divided government?
Yes. So both sides seem to want to cut regulations, and they say cut regulations, cut red tape. The question is, what is that regulation? What is where's the place that they can agree on? So, there will be some overlap. So there will be something you can get done. Taxes on tips seems to be something that everyone agrees on, right? It's a bipartisan policy talking point. It's popular both in the House and the Senate with a number of rank and file members. So that seems like it could probably get done, again, probably alongside SALT and an extension of the tax cuts. Maybe you get a little tweak to the way that the Trump tax cuts were written. Maybe you don't. But it looks like you can get something done on that front. Other than that, I think it's going to be very, very difficult for the House and Senate to agree on big, call it policy changes. There is some agreement that AI needs to be addressed, whether it's on the regulatory front, whether it's on we want to win at this. There's some agreement there. The question is, do we want to regulate it, kind of European style? Do we want to, encourage innovation, kind of treat it like crypto and have very, very little in terms of guidance, but kind of encourage, entrepreneurship and things of that nature there. So I do think there are a number of things that are going to be debated and it can probably be agreed to and kind of move us along, but they're going to be incremental outside of some of the tax debates.
Look at how much I've marked up this page as with concepts. I got taxes, I got energy. You can see it to some extent in the market's internals. It appears that Trump on-off correlates with crypto. We think that right now it's a situation. Well, I don't know. I think that we think that the view is that the GOP is more crypto friendly, but that the Democrats are catching up, realizing that it's a political winner to be crypto on. AI tends to be more GOP friendly as well, mostly because of Sam's comments with respect to the Lena Khan FTC. So this is, again, the MAGA platform explicitly calling out crypto and AI in bullish type terms. Democrats probably need to catch up because nobody dislikes AI. We will see. I'll stop the screen share here at 11:28 Central. We got 2 minutes, fellas.
Got a question that just came in here. We'll answer before we leave from Patrick. Sam, I think I know what your answer is going to be to this, but is the Harris tax proposal, especially regarding taxing unrealized capital gains, a legitimate possibility in a split Congress?
Absolutely not. I mean, it's probably not possible if it wasn't. If it was a straight blue Senate and House, it's unlikely that it would pass. There are too many Democrats that get elected in places that would significantly damage. So it's highly unlikely that you're going to see that anytime soon. It's very similar to Trump's proposal to replace income tax with tariffs. Right? The U.S. government makes less off of tariffs than it does off of excise taxes on cigarettes and alcohol. So it's going to be very, very difficult to do either one of those proposals. And every time that they're heard, they should just be discounted to zero.
Over here, I'm realizing we're wrapping it up here in the final minute. I was going to flash up the upcoming office hours, but that's what you've just tuned into. It's us talking markets. Some of them are Fed meeting results, office hours. Others are CPI reports. Others are, we're talking about the future of dividends for an hour. So make sure you tune into all these. We hope you appreciated our back and forth banter. And thank you for those of you who pre-submitted questions and those of you who submitted questions during the call. And hopefully we pissed off some of you as well with politics. I thought we sounded pretty apolitical, guys. So we'll leave it at that. Everyone have a great lunch and take care.
Thank you.
Take care.